Welcome to DayTradeToWin, how to trade using price action. In this week's episode, we are going to start looking at specific types of candles and series of candles that you can identify in your charts and use them to improve your price action trading. If you use some software like the DayTradeToWin Atlas line or Trade Scalper to find your trades, you can definitely combine that with reading price action. Our day trading strategies are all based on price action, so it makes perfect sense combining those automatic trading signals with reading price action. You can of course also use price action alone to find trades. For times when the software does not provide any trading signals and you want to be actively trading, but please always remember to refrain from over trading. Just because you're a day trader, it doesn't mean you should be trading all the time. It's important to know when to stay out. So I recommend using price action not only to find trades, but also to filter out bad trades and knowing when to stay out. Now, before we go into details and start looking at specific candles, you'll need to understand how the pricing of securities work. Whether it's stocks or shares you're trading, or forex, cryptos, currencies, futures, commodities, all trading is a lot like a public auction. People in the crowd try to bid over the others in order to get the item that they want. The highest price that anyone in the crowd is willing to pay for the item gets it. So if you're ready to pay more than everybody else, the item is yours. Congratulations, you just paid more than any other person in the whole world was willing to pay. You're the one that's left holding the bag. In economic theory, and by the way, I'm sorry for being such a nerd. I sometimes like to mix my silly examples with economic theory because I'm a nerd with a master's degree in economics and business administration. And during my time at the university in Stanford, I came across a bunch of stuff that actually makes sense in real life and helps me in my trading. So I'm trying to pass on the good stuff to you. Anyway, in economics, there's something called the winner's curse, which describes the phenomenon where a winner at an auction tends to overpay because of emotional reasons or because of incomplete information. The winner either pays too much or the item is not as valuable as he and everybody else had thought. Much like trading, we all know how bad emotional trading can be. If you're willing to pay more than anyone else for getting in, you'll be screwed. If you buy right at the top, well, you're screwed. And obviously, with incomplete information, you won't last a day in the markets. So if you don't really know what you're doing, get a day trading mentor. And our next mentorship program starts soon, by the way. Anyway, the stock exchange or the forex marketplace works slightly different than a regular auction, but it's more or less the same. The difference is prices can move up like we're used to, but the price can also move down if nobody wants to pay any more than the current price. You see, the brokers and the market makers always try to fill your position. That's how they get paid. They don't care if the price is $10 or $100 because every time there's a trade, they are cashing in. They just want you to trade as much as possible. When you're a broker, the price is always right. So when there has been a lot of demand for a stock and it has increased in price, then at some point there will be no more demand because the traders think that the price is getting too high. Well, in order to make money, the market makers start offering the stock at a lower price. They don't care if the price is going up or down. They don't get their cut based on how much they are able to increase the price. They get their cut every time somebody buys. So they will always want to find the optimal price where the trades are going to happen. So the first type of candle that I want to go through is what I call the big green candle. I have no idea if this type of candle or bar has any specific name. If you know of a real name for this, please drop a comment below. It would be interesting to know. So the big green candle is exactly what the name suggests. It's a big candle. Prices moved up, so it's green. A big green candle. So let's think about how this candle is formed. You know that the pricing of securities are much like a public auction. And to give you a simplified explanation of what's actually happening behind the scenes, the market maker asks if anybody is willing to pay the current price. And if yes, then the market maker fills all the open orders at that price. Then, when there's no more orders at that price, he tries increasing the price 1 increment and asks if anyone is willing to pay that price. And if there are traders willing to pay that price, they will get filled. Then, because there's more demand for the security, the price is increasing all the time as long as there are buyers, as long as there is a lot of demand. So this is how it would look at the market. The market maker wants $10. Do you want to buy? And the crowd goes, yeah! Well, how about $11? Hell yeah, that's a steal. $12, get them while they're hot. Most def, yo. $13, it's going up. Yes, I want it. $14, we're going to run out soon. Yes, fill me. $15, final bid, I'll take it. $15, here it goes. 1, 2, 3, bam, sold. $15. So for the duration of the big green candle, the price is going up, and the more demand there is, the bigger the volume bar is getting. If there wasn't demand for the security, then the prices would not increase because the market maker would not be able to raise the price. Let's consider a real life example. Picture yourself at an auction. There's an item that you really want to buy, but you seem to be the only one who's interested in this specific item. Now, if there's no demand for this item, if there's no other buyer than yourself, it doesn't make any sense paying more for the item than the current price. Does not make any sense bidding over your previous bid, does it? If there are no other buyers, then you might as well try to pay an even lower price for the item. It's not going to be sold anyway. So when you see a big green candle, you know that there's a lot of demand. The bigger the volume compared to what's normal for the security, the more demand. The bigger the candle, the more demand. And when you have a series of big green candles, you know that the demand is not going away, but there's big demand over many candles. When you have a series of bullish candles and the market is moving up, usually it's best to wait for a pullback before buying. And the pullback usually happens on less volume. And that's it for today. Subscribe, and please remember to share this series of price action trading videos in your social media. It'll make you look great. Until next time, good trading.